Eric Muathe, Muathe.com, with a quick response to your question on your holding, India Glycos. Here you note that your average price is at about 155. Stock is trading at 159. And I believe you took some profits here, partial profits. So pretty much if you consider all that, you are sitting pretty. That's what you should do whenever you see a nice gain short term. So you took profits. Your average price is still well below where the stock is trading. And keep in mind that based on our buy point on the weekly, the stock continues to trade well above the buy point. This was the breakout. And that buy point was at 140.55. So holding very well. The breakout took place and we had a follow through. In other words, we broke out. We had week number 2 above the previous weekly closing high. That's follow through. Usually that's a good sign of intent to move higher in the coming weeks and the coming months. Of course, we'll have to see how that plays out. So pretty much given your entry price, your average price where the stock is trading, you can give this stock a chance to be sideways. And depending on how long you are looking to hold this one, and let's say you have dreams of owning the stock, so you can be part of a move like this one that took about 2 years. If you want to have such types of a return, then obviously we have to be very patient. And keep in mind, as long as the stock is trading above your average entry price, you can still give it room to be volatile. In other words, if we go back to your average price, which is somewhere here, so somewhere about 155, let's say you want to give it about a 5% cushion. In other words, even below your buy point, up to about 5%, as an example, which would be at about 147, which would be somewhere here. I think you have a lot of room to let this stock be sideways, even up. So the fact that you have a good entry gives you pause not to be in a rush to get out of a position. Keep in mind on the monthly, the stock continues to maintain the very look we look for. MACDs at 3-year highs. That's great. RSI also at 3-year highs. So definitely meets the minimum requirements as per our method, the ultimate Muathe breakout. So as long as the stock meets the minimum requirement, we have no reason to get out of that trade unless we get stopped out. Keep in mind, ideally, would like the stock to jump above 69.1. That would be an ideal situation, which would be something similar to this stock here on a monthly chart from 2012 to 2015, holding above 69.1 on its monthly was a technical reason why it had this amazing run from, let's call it, lower 20s to the highs here of about 135. Why? Because the RSI held above 69.1 on the monthly. And again, I explained this phenomena on this playlist on my YouTube channel, so check that out. Explains where we get that 69.1 number and threshold we need to always be watching for. So the monthly continues to look good. If we take a look, let's say, at the daily chart is fine. After a nice explosive run here, it's pretty much trading sideways. That's a normal pullback, nothing wrong with that. Short term, we can see that it is coming back to test this break line. Once we broke out above that line here, the stock jumped and had a nice reaction higher. So if we extend the same line, so the same line extended, you can see what the stock is trying to do is coming back and test that line on a back test situation. So trying the best to hold that line. So that's one view which confirms this is just a normal pullback. We haven't seen anything that terrible. And we can also see on the daily RSI support line. coming in play. So there's another reason why the stock could find support around current levels. Again, as long as those two lines are holding, we have to assume that this is just a normal pullback after a nice gain. And if we take a look at the hourly, we can see that ever since it moved above this RSI level, this entry, stock's done well. And we know that by our uniformity method, that every time we come to the same line and bounce with uniform activity, the key is the uniform action support. Uniform action support here, or our uniformity line for the lows there. And over the last, let's call it day or so, RSI has come back here, and we seem to be holding this with double bottom support. So even on the hourly, looks like it is coming back and finding support where it needs to. And as far as uniformity is concerned, you can get more, of course, on my channel. And there's more, actually, more topics discussing that phenomena, the RSI support. And you can check out also these other playlists if you want to understand that a little bit better. So pretty much net here, stocks acting well, coming back to test that uniformity support line. Given the daily support, hourly support, the way the weekly and the monthlies are behaving, it's one to hold and see what happens. Give it time. Maybe this is going to be a good one. Otherwise, at some point, if it starts breaking below maybe the 5% level, maybe you can get out. But for now, there's really no reason on the charts as best as we can see. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. E-A-C-S. Woo!